Brian Bailey Home Show. We're here at Direct Mortgage Loans today with Amanda Brune. And wow, so much good information so far. You guys have been here since the beginning. You heard us when we talked a little bit about Amanda, how she got into the industry. 13 years, right?
Yeah.
13 years as a mortgage loan officer. Is that the exact title?
Yep, that's one of them.
Okay.
Whatever. There's different names, yeah.
Mortgage
consultant, loan originator, loan officer, mortgage loan, senior loan officer. So you can hear different versions of it, but all similar expectations.
13 years, good experience, really helping out here in Maryland and also other states, right?
Yeah.
So you're licensed in California. I think we talked about that.
Yeah, all over the country.
All over the country. So that's good. We talked about the importance. We talked about credit a little bit. We talked about the different type of loans. But I wanted to get into the differences and why would someone do this. 30-year loans. You hear a lot of people say, hey, I'm going to get me a 30-year loan at 3.62%. Or they might say, I'm going to get a 15-year loan. Why do you want a 15-year loan? Or they might do an adjustable rate mortgage. So can we talk about the differences and why would someone choose a 30 compared to a 15 compared to a adjustable rate? Can you do that?
Sure. The first thing you'd want to do is really discuss your goals, and that's what a good loan officer will do first, is talk about your goals, what you want to do with the home. Is it going to be your primary home? Is it a second home? Is it an investment property? Is it going to be a home you're going to keep long term? Is it one that you're buying for your kid to go to college? Is it one that you're buying at the beach that you only want to keep for a few years? Those questions are going to drive what term you want. Also, your financial status. Are you paying for college right now? Are you paying for daycare? Do you want the lower monthly payment now? Or do you want to pay your house off faster? Most people want both, right? Of course. Nobody wants to have a mortgage payment, and ideally you want to pay it off. Interest rates are so low now, though, that many have gone back to 30-year mortgages because you can always pay more, which is a trick that is something that's good to utilize. The interest rates are extremely low. I mean, historically, right? They used to be 8, 10, 12%.
That's right, I remember that.
So obviously nowadays with these 3 and 4% interest rates, to pay on that for 30 years is not as bad as it was when you were double digits on the interest rates. But typically a 15-year mortgage is going to shave off 15 years of payments. Ideally, that is going to save you a lot of interest. And also the interest rates are less on a 15-year mortgage. That is also the reason why a person would choose an ARM. I actually bought my first house with an ARM. Of course, that was back in 2004 when there was more than just the typical ARMs they have now. And many have heard of ARMs as being kind of a slippery slope or a dangerous position to be in. And those ARM products were in the past. They only had 2-year ARM products, 3-year ARM products, and ones that had big prepayment penalties. So what happened was the consumer couldn't refinance to get out of those without paying a big penalty, and so many didn't. When the interest rates started adjusting up, it became too high for them to pay, and those were contributed to what happened with the mortgage meltdown, really, years ago. Those type of ARM products have been eliminated. Also, there were option ARMs where you could make different payments. Those have been eliminated. Any type of product that could put you in jeopardy, the government has kind of said that's not going to work anymore. We need to make sure that we're having programs that benefit the homeowner and that give them long-term home ownership. I mean, that's the goal. There are ARM products, though, and they are really great. The 5-year, the 7-year, the 10-year, they are wonderful for paying lower interest in a specific amount of time. So some want to have their house paid off in 7 years, or they're going to move in 5 years. So they take advantage of that lower rate for that time period so that they can really save money and pay down their principal. And that's the goal and the benefit of having an ARM. Versus a fixed.
Yes, and the big thing you said is you have to plan your whole home buying process out, not just before you buy the home, but also think long term, right? Like you said, the kids graduating in the next 5 years.
10
years, kids graduating next year. you know, empty home coming up?
Oh yeah, and a lot of times you'll meet with a financial advisor, which you know, we always recommend is a good
Okay.
thing, and they have many different perspectives on the mortgage, you know, and again, with your goals. I mean, we're not financial advisors.
Right.
We are your mortgage advisor, though, and we
Yes.
want to have a lifelong relationship, which is one of the things direct mortgage loans really strives
Okay.
for, because you think you're going to buy your home and you may keep that mortgage for
Yes.
30 years, but
Right.
typically a homeowner refinances every 5 to 7 years for different reasons. So you might have bought your home with an ARM, and then you might have refinanced it to a 30-year fixed or a 15-year fixed,
Okay.
and then maybe you decided to retire
Yeah.
and go back to a 30-year
Okay.
fixed at in a different home, in a different location. So you're going to need our services throughout your life. So we really try to become a partner with you in that and make sure that we're looking at short-term and long-term
Okay.
goals.
Okay. Well, good. This is good information. Thank you for going over that, because I know so many people are wondering, why should I do a 30? Why should I do a 15? Should I do adjustable? And you did a great job of answering those questions. I want to go ahead and have people know a little bit about your company. So we're going to take a break.
Okay.
Then we'll come back and talk about direct mortgage loans.
Yep.
All right, and find out, you know, where the company's located, headquarters, why are they a great company when it comes to servicing or putting in effect your mortgage loan and going through the process.
Okay.
So we'll see you soon. Welcome to the Brian Bailey Home Show.